it's advisable that retail investor should not invest into a small cap or mid cap companies directly. Let's understand what are the reasons. First, inadequate research resources. We have all seen that if you want to carry out a research on this small cap or mid cap company, first of all, you need to have access to very good database through which you can understand the business of a company. So take an example, if I compare it with any other institutional investor like mutual fund or maybe even FI, they do have access to various research resources such as Bloomberg Terminal, Reuters Access. Apart from them, they do have access to a lot of these broking house which do cover this mid cap or small cap. But these resources may not be easily available for a retail investor and they cannot afford to have this. Second thing, we'll have to understand all these institutional investors or mutual fund, that's their daily job. They are involved into market activities on a daily basis. Not necessarily that would be the case of a retail investor. So they generally do not have that kind of resources in terms of research availability or in terms of resources like a time to carry out this research. Generally, investors or retail investors do have a biases like herd mentality. They generally invest into all these small cap and mid cap companies based on a recommendation of maybe either their friend or family or their known alliances, right? And generally, they do get into a panic mode the moment price starts falling down because they do not have the basis of investing actually in this kind of company. They don't understand whether the company is good or bad. Does it have a small or does it have a solid base? And what is the reason for this kind of panic selling? That's why they are fixated only to one aspect of investing, is just a price. So they know the price at which they bought it, and the moment the price starts falling below that, they get into panic mode and they start selling. Another reason is inability to absorb losses. Generally, any investor who get into capital market do have a aspiration to create a wealth, and that's why they are investing. But we'll have to understand the wealth gets created over a period in long term by remaining invested. And that's why if an investor doesn't have a higher risk appetite or ability to afford losses, they should not invest into small cap or mid cap stock. Small cap investments require a demand or require a patience and conviction, right? And probably you can have a patience, but conviction comes with the expertise to understand the business and the potential of that business. People would expect that if they would have invested 10,000 in 1995 in Wipro or Infosys, they would have become a crorepati now. So we are talking about a period of 2 to 3 decades and not a short-term investment of 2 to 5 years, right? So in order to create that kind of wealth, you have to remain patient. And first of all, you have to have that kind of conviction in the company. Emotional volatility, watching large drawdowns, considering that this small cap and mid cap are susceptible to higher gyration in terms of their prices, you'll have to understand that you should only invest into this company if you can absorb losses. You should refrain from any kind of decision making if you are emotionally attached to that particular stock or company. That's why you should not make any decision when you are emotionally affected by the large drawdown.